Welcome, Judy Copenbarger here. Today we're going to add to our series of videos about investments and help you understand specifically what a dividend stock is, how it might benefit you, and how having dividend stocks might improve your portfolio. Our goal is to help you optimize your investments. And today we're going to discuss dividend stocks that have dividend yields, what they are, how to use them, and how they can benefit you. We'll cover how to choose the right stock and why any company would ever choose to pay you a dividend anyway. The first thing that you want to know about dividend stock that pay dividends is that they pay dividends. So that's important. And let's do a deep dive now in determining where the dividends come from and why they would be paid to you in the first place. So you might have a question, and the question is, Judy, I love dividends, but how do I know how much dividends I'm going to earn? Actually, what will the company be paying me? Let's look at that. The first thing the company's going to do is apply a formula. They're going to look at how much money they made over the year or over the period of declared time. They're going to figure out how much money they made, pay all their bills, and whatever left is profit. With that profit, part of the formula allows them to take a net profit and pay to their shareholders. That's who you are. So as a shareholder, you own a little share, a little piece of the pie of a company, and that's what we call stock. If it's a dividend stock, when the dividends are paid, you as a shareholder get to partake in that profit. So every once in a while, on a declared date or a declaration date, they're going to say, we're declaring we have a profit and we're going to share it with all of the shareholders out there, and that's you. That's a dividend yield, and that's a dividend stock. Remember, the dividends are only paid on the most recent period of time or the most recent year. So when the dividends are paid, you might think, oh good, I'm going to get dividends next time, and next time, and next time. Not always true. Sometimes the companies don't have as much profit to share with you as a shareholder. Other times they have profit, but they need to keep it in their possession to capitalize the business. There might be a new product they're developing. They might have unexpected expenses that are higher than before. They might have higher payroll, or they're developing a new line or distribution scheme. If they need more money to capitalize the business, that might impact the amount of profit that's paid out to you as a dividend in a dividend stock. Have you ever had a dividend promised to you, or bought a stock that was supposed to be a dividend stock and you never got a dividend? If so, I would like to hear that in the comments below. Share your story with us, and we'll have a conversation about what you learned, what happened after that, and make sure that other people can learn from your mistake. There are some companies that are more interested in growth than paying dividends. So when you're looking in your portfolio for a dividend stock, this is where you're interested in the ongoing income. This is going to be a more stable company, maybe a larger company that has been around for a while, and they know what their income's going to be. They have a track record of paying out dividends because the profit is very stable. That's going to be your dividend stock, and you would choose it when you want to have the earnings and share in those shareholder dividends. A growth stock is going to be more of a buy and hold strategy. That's going to be either a smaller company or one that is expanding quickly, where the value of the stock is actually increasing at a great rate. Because it's increasing at a great rate, that means they're in growth mode, and when they have a profit, they're probably putting it into more distribution, more manufacturing, more expansion, and more ways to make more profit. So they might not be paying a big dividend or any dividend for a while, but it would be a growth stock. So you always want to know what your objective is. Do I want dividends or do I want growth? There are some stocks that offer both. So to make sure you get this right and have the right amount of dividend stock and the right amount of growth stock, talk to your investment advisor, your investment professional, and ask them how much you should have of each and for what reason. That way you'll be able to build the perfect portfolio for you. And just as a note, a company that's paying dividends is evidence of stability. It's evidence of a track record, and it's evidence of confidence that they can continue to grow that profit. So check out our video, How to Invest for Beginners, where you'll learn how to choose what kind of stocks, what percentages to have, and how to avoid costly mistakes when it comes to building an appropriate stock portfolio for you. There are companies that may try to attract you with dividends that may or may not be paid out to you. So watch out for those. Sometimes they'll hold a little carrot and hope you take a bite. To make sure you don't make a mistake and bite that carrot and add a portfolio stock that's not appropriate for you, look at the track record. It's easy enough to look up a performance history of a stock to see how often they actually do pay out a dividend, whether they advertise for that or not. The second tip I have for you is to understand the company's potential for growth. Not only where have they been, but what is the organization saying about where they want to go? Are they taking on a new product line? Are they expanding into a new geographical area? What's the vision of the leadership of the company? Make sure you know before you buy any stock, because remember, you're buying a piece of that entire pie. Whatever information you would need to know about the whole company, if you were buying the whole company, is the same you should know if you're buying a little slice of the pie, if you're just buying stock. So please inform yourself and make smart decisions. Lastly, and probably the trickiest unless you have a background in corporate finance, is to make sure that the company you're investing in has a sound financial picture. They're sound financially, their P&L is good, their balance sheet is good, they're paying all their bills on time, and they have a steady growth pattern. I recommend that you consider adding a dividend stock to your portfolio. You want to do it at the right time, and you want to do it for the right reasons. But now that you know better, you can do better. Our goal is to help you become a little bit wiser every day. Each time you learn, each time you add information, one thing that you can do for yourself to serve you well is to subscribe to this channel, share this video with other people that also want to do well with their investing, and make sure that you add comments below about the investment experience you've had, any dividends that you've received from your stocks, and any questions that you have about your portfolio in total. And we'll keep adding this information to our series of investment videos as we move forward. So I'm Judy Copenbarger, and now that you know, you can go and grow. God bless.